SCHD. Some people love it, some people hate it, some people think that you should only invest in it when you're approaching retirement age. Now, I've done the contrary to that. I've been investing in SCHD for a while now. I kind of want to talk through the strategy and my thought process around SCHD. I will admit that it hasn't had the best returns in sort of the short term, but I want to hone in on what the actual strategy behind investing in something like SCHD could potentially look like and some of the alternatives that you might consider. So without further ado, let's just jump right in. So there's no secret why people actually do like SCHD a lot. Obviously, the dividend income that you do receive, it's completely passive. All you've done is put money into the ETF and then you're paid and rewarded just for holding it. It's no different than how other, dividend stocks are going to work and dividend ETFs for that matter. But SCHD has been one that actually has performed relatively well. And I know that I mentioned that in the short term, it's changed a little bit, but let's take a quick look at my current strategy. It's really straightforward. So SCHD for me, I invest in my Roth IRA because every time I get paid dividends from SCHD, they're going to be tax-free in a Roth IRA. It's exactly why I do it. And it's really straightforward. Now, my strategy is I max out my Roth IRA every single year. $7,000 is the max. Robinhood actually gives me the IRA match of $210 if I max it out. So a little bit of extra free money. And then basically I take that money and then I'm able to invest into these two different ETFs that I've selected. One is SCHD, one is VTI. What I'm going to do moving forward is split this right down the middle. So $3,500 every single year is going to go into SCHD. $3,500 every single year is going into VTI. And I started doing this a while back and the results are pretty interesting. So all you need to know right now is that I've been investing about $14.70, about $15 every single trading day that there is into SCHD. And the returns don't look like anything too crazy, but let's take a little bit of a deeper dive into some of the stats behind it. Okay, so basically I want to run through what we're going to get for a return on something like this if you're following a strategy similar to what I'm doing. This is kind of like how I like to think about my future with these investments based off historical data. It's really, really helpful. This is using MarketBeat, a dividend calculator, and I'll show you exactly what I mean. So obviously we're investing in SCHD here. We're going to pull that number in, and you can see it's an individual stock is what it's categorized as, even though it's an ETF. Not a big deal. Dividend reinvestment will turn on, meaning anytime we do get paid a dividend, we're just going to reinvest it right into SCHD, continue the growth there. Now, I'm going to get some of these numbers directly from Robinhood, so let me share that here. And you can see that I have approximately 494 shares currently at a share price of, if I scroll up, 27.50. Now, my annual contribution to this is going to be $3,500. Again, we're maxing out the Roth IRA with the two different investments. My dividend tax rate, guess what? 0%, because it is in the Roth IRA. Now, SCHD dividend yield, I just looked that up. It is 3.7%. 3.7%. I don't know if I just said that right, but 3.7%. The expected annual dividend amount increase percent per year. We can pull from Seeking Alpha. You can see it's about 10.87% yield. 10.87% year over year. So let's go ahead and update that, 10.87. And then the expected annual share price appreciation percent per year. So SCHD average 10-year growth. Let's see what that's looking like annualized. And here we go. It's 11 to 12%. We'll go smack dab in the middle at 11.5%. And the years invested, this has 20. Now, let's say, I'm relatively young for some of this stuff. I'm 28 years old. Let's say I wanted to retire early. I get that this isn't a retirement account and I won't be able to touch it completely tax-free until I hit retirement age. But, you can withdraw some of the stuff that you have invested currently into. I'm getting long-winded here. Let's say I wanted to stop investing at 58 years old. So I got 30 years with this bad boy strategy coming in hot. If I go ahead and I calculate the dividend, this gets insane. My ending balance is $2.38 million. That's one small fraction of my investment strategy that I've been setting up with a total return of over 1,900%, average annual return of 10.52%. I'm basically getting paid a nice little salary off of one particular ETF investment in my portfolio, $75,202. Now, the total dividends that I will have paid over the 30 years that I was invested is over $500,000. Just insane. And it really shows how the compounding works from a visual chart from this perspective, you can see how much it compounds towards the end. And that's why people say that time in the market beats timing the market every single time. Now, this is where dividend reinvestment comes into play because, again, $2.3 million. If I stopped reinvesting dividend payments, it drops to $1.1 million. That's how big of a difference an investment like this makes when you can actually reinvest what you've been putting into the market. So unfortunately, when it comes to running numbers like this, it is a little bit like playing house. I wanted to come up with another scenario for what I think could be potentially a little bit more accurate. So when you look at something like the expected annual dividend amount increase per year, yeah, 10.87 is all great, but I don't know how attainable that is. I dropped that down to 9%. And then the expected annual share price appreciation percentage, well, the percent that I went with before factored everything in. So it factored dividends that were being reinvested already. And so I dropped this down to the price just appreciating by 8% every year. And now we'll keep the same assumption that we're investing for 30 years, same starting values. You can see that the ending balance drops to $1.3 million, but that annual dividend income is actually still relatively solid, just because that is increasing actually faster than the price appreciation. So these are all just numbers that you want to crunch and just think of in the forefront. And then you have to remember that I'm doing the same thing with something like VTI. So if I go and take a look at VTI, Vanguard's total stock market index, we are going to do, again, I'll share my screen. I'll show you the numbers that I'm rocking with for VTI. Click into VTI. Now I have 55 shares currently, and the share price is $324.31. That's right. Annual contribution again will be $3,500. Zero for that dividend tax rate. Annual dividend yield. Let's look that up real quick. VTI dividend yield. Let's take a quick look at what that's going to be. And that is 1.14%. So I think it was actually pretty accurate for this, 1.16. I'll just drop it a little bit here. Expected annual dividend amount increase. Let's look that up on Seeking Alpha here, VTI. If I can scroll down here, you can see the 5-year growth rate is 5.06% annualized. So let's do 5.06%. The expected share price appreciation. So VTI return annualized 10 years. Let's see what that looks like. And it is about 13.9%. So obviously more growth here. So 13.9. And years invested, we'll tick this up to 30 and we'll calculate the dividends, which is going to be low dividends. Just hear me out, but we still get another $2 million return. So now in conjunction with SCHD, we're looking at a $5 million portfolio from this strategy that we're doing. And man, that's just like a small chunk of what we're investing in overall with everything that I'm doing with my accounts. So it's insane to think that all of this time that we have ahead, you know, that's only 2 different ways that I've been investing and I will be investing, and I'll continue doing stuff like that. It's just going to be insane how much we're able to amass the longer we can continue investing for. So again, there's a lot of assumptions being made here, and you can see the annual dividend, well, it feels low at $2,328, and there's a reason for that. If you want the yield to reflect today's yield, you have to do something very important here. You set your expected annual dividend amount increase to match the expected annual share price appreciation. That way those numbers are going up at a similar rate, and you'll see a, similar yield to what we have today. So for this example, I did drop it from 13.9 down to 12%, but I also increased the expected annual dividend amount percentage up to 12% as well. So now you can see that the annual dividend income looks way more normal at $20,387, and you have an ending balance of 1.7. Again, this is just for fun. These aren't exact numbers. Like, this is just to tool around, figure out in your brain how some of this investment stuff works. And yeah, honestly, what I think is really cool about this strategy is I try to play it safe in this retirement account so I can at least set myself up for a really good future. This is kind of the solid foundation I have to sleep well at night. And what it allows me to do is target different approaches for my individual investment account that is taxed in different ways. And I can get creative with the other ways that I'm trying to compile money, basically my financial journey. I've also been investing in real estate and some other stuff that's been going on. So all of that is great. But this is what gives me the largest peace of mind with my investment strategy, where I've seen some stable, consistent returns time and time again. And I think that if you're somebody who's just getting into investing, or maybe you're looking at an approach that you want to get some decent, stable returns, well, it's one that I would look more into and consider what ETFs and investments that you can kind of put on autopilot, auto invest in, and feel pretty confident in it. Now, again, I'm not a financial advisor. You don't want to just blindly copy anybody on the internet that's talking about this stuff. This is just my thought process when it comes to these different investments. And that's why it's kind of one of my favorite investments, despite what you might be seeing on the returns and what people are talking about online and all this different stuff. It is just a staple that has been in my strategy. And I want to know whether or not you're investing in something like SCHD. So definitely, if you made it this far in the video, leave a comment down below. Really appreciate you checking this out. And yeah, have a great day.